good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we continue our analysis of financial reports or earnings results that have been released continuously as we are in earnings season, in fact. And today we are taking a look at Sagiko Financial Corporation, recently delisted, well, relatively recently from the Trinidad and Tobago Stock Exchange, as well as Gmmb Group Limited. Now, both companies are related to some extent, with Gmmb owning a 22.5% stake in Sagiko Financial Corporation, which would have, as mentioned, been delisted from the Trinidad and Tobago and regional stock exchanges and listed on the Toronto Stock Exchange, now trading in Canadian dollars. Let's take a look at the performance of both companies, and turning firstly to Sagiko Financial Corporation. The group would have recorded a fully diluted earnings per share or loss per share figure rather of 22 cents per share, which would have compared quite unfavorably to the 43 cents recorded in the prior comparable period. Just a note for investors, all of these figures are in US dollars. That's a 151% decline, and that was really driven by a decline in net total revenues of 1.2 billion, which was a 13.7% decline from the 1.395 billion recorded in the prior comparable period. Now, premium revenues were down just around 5.2% as a component of total revenue, and investment income actually swung from a profit of around 84 million to a loss in the low 20s in the most currently concluded period. Total benefits and expenses also declined 9.1% from 1.28 billion to 1.17 billion, but that was not enough to offset that 191 odd million US dollar decline in total net revenues for the company. Now, share of operating losses share of operating income would have swung from a positive to a negative, from 8.8 to a negative 3.3, so moving from a profit to a loss there. And overall net losses net loss to income attributable to shareholders would have swung from a profit of 33 million in the 9-month period of 2019 to a loss of just around 32.6 million in the 9-month period concluded in 2020. So an almost 200% decline, if you like, in terms of its profitability and earnings attributable to shareholders. When we take a look at the segment net income or loss from continuing operations, we see not such a pretty picture, and we can notice that from the Sagiko Jamaica segment, profits fell almost halved or more than halved from 91 million odd US to 43 million, as well as Sagiko USA falling, or Sagiko Life rather, falling from 31 to 13 million, and Sagiko Life USA falling from a profit of 19 million to negative 36 million. So certainly a challenging performance across most jurisdictions, and that sharp decline in investment income would have led to that swing from a profit to a loss position for Sagiko Financial Corporation. So at a current price of $6.05 Canadian, as it would have closed on the Toronto Stock Exchange, Sagiko again is trading at a trailing price to earnings, trailing loss per share, which means that its price to earnings ratio is, negative. So, which is compared to the 11.3 times earning or average figure of its industry comparables in Canada. And at the moment, it offers a trailing dividend yield of around 4.9%, which is pretty much in line with its comparables or competitors across in the Canadian market. So based on stabilizing financial markets, which should improve its profitability going forward in subsequent quarters, or at least stabilize it, overlaid by still very vast economic uncertainty, Bourse is going to maintain a neutral rating on Sagiko. Turning quickly to Gmmb Group Limited, and for its 6-month period ended September 2020, which is their fiscal 2021 year, the group recorded an earnings per share figure of 6 cents, which was a 28.1% decline from the 8 cents recorded in the prior comparable period. Now, operating revenues were down from around 541 million TT equivalent to 498 million or thereabouts. Operating expenses, on a positive note, did decline from 342 million to just around 331 million. However, impairment losses on financial assets increased from 13.6 to 17.2 million, which was a 26% increase. What's not noted here is the share of loss from associates, and we mentioned earlier that Gmmb does own a 22.5% stake in Sagiko Financial Corporation, and that loss attributable to the associate, in this case Sagiko, was in the region of 4.9 to 5 million TT dollar equivalent. So overall operating profits would have declined just around 18.7% from 185 to 150 million, and profits attributable to equity holders would have declined from 125.9 million to 108, which was a 14.2% decline. So why the significant difference between the profit attributable to shareholders of 14% decline and earnings per share decline of 28%? Well, as investors may recall, there was an additional public offering made by Gmmb to the public within the past year, and that would have led to some dilution of earnings. So basically more profits or less profits to go around per share outstanding. When we take a look at operating revenue by component, we can see that there were declines across most segments, but positively for net interest income, which portfolio grew about 33%. There was just a modest 7% increase in net interest income, going from 214 to 230 million in that yellow column. But most of the other, or all of the other segments, including gains on securities trading, foreign exchange margins, and fees and commission incomes, would have all registered declines. So at a price of $1.75 as it trades on the Trinidad and Tobago Stock Exchange, Gmmb is trading at a price to earnings ratio of around 10.7 times, which is representing relative value to the sector average of around 11.4 times. But from a dividend yield perspective, it is below the average of 0.7%, with the average being 1.2%. So on the basis of fair valuations, again, in similar fashion to market stabilization, that should benefit Sagiko and other members of the non-banking finance sector. But again, overlaid with that very significant economic uncertainty over most of its operating jurisdictions, including Jamaica, Trinidad and Tobago, and the Dominican Republic, Bourse is going to maintain its neutral rating on Gmmb Group Limited. Well, that's it for this week's edition. For more information, you can give us a call at 2-BORSE or 226-8773. Email us at invest@borsefinancial.com, or check out our website, of course, at borseinvestment.com. And you can also find us in The Guardian today, the business section of today's Guardian. Have yourselves a wonderful investing week. This has been the Bourse Report.